Good evening, everyone. My name is Sam, and I'm from Appster. And thank you very much for joining us at Disruptive Startup tonight. Just to give you a quick, just to get an idea, how many of you guys have been to Disruptive Startups before? Just show of hands. Right, a good number. Okay, great. Well, thank you very much again for joining us at Disruptive Startup. For those of you who haven't been to DS before, DS is an event organized by Appster. Appster is a development company, more like a accelerated execution partner for technology startups and entrepreneurs. We basically have entrepreneurs come to us with an idea. We take that idea through different stages, and we take a look at their business plan, we take a look at the marketing, growth strategy, and so on and so forth, all the way to developing a product, a full-fledged product for them. And in the whole process, we take a look at every single stages of it, and it comes out at the end. Now, as part of the activities that Appster does, Disruptive Startup is one of them. And the aim of it is to promote entrepreneurship and that culture of startups and the mentality of getting away from the 9-to-5 cycles and exploring the outside world. And in these events, we were usually honored by great people who have actually done that and have achieved something great in their industry. Tonight we have two guests which I'm very excited about in the fintech industry in Melbourne. And what the very first guest is Charlotte Petris, who is the co-founder of Timelio. And our second guest is, who I'm going to be sitting down with, is the co-founder and CEO of Moula. We're going to be sitting down discussing everything about fintech in Australia and beyond. After that, towards the end of the night, I'm going to sit down with Adam Schwab, who's the CEO and co-founder of Aussie Commerce, which is one of the biggest e-commerce groups in Australia. Our first two guests that are going to be talking about fintech. The first guest, which I'm very excited about, is Charlotte from Timelio. Now, Charlotte has an extensive experience in, her background is in finance and accounting. And she was based in London and moves back to Australia. And when she does move back, she starts the company she has right now, Timelio. It was called something else at the beginning, but at the moment called Timelio in 2015, but not a very long time ago. Now, the very exciting thing about Timelio is that in a very short period of time, it's not even a year yet, these guys, they've basically turned, and they have a transaction up to $10 million at this stage through their company, through Timelio. So it's an exciting company, and it's growing very fast, and that will be our first guest. Our second guest, which is again as impressive, Aris, who started with his co-founder the company called Moula, is he was one of the guys that from very early stages. He started his company back in late '90s when the market was just crazy and going on with the before the dot-com boom, well, the dot-com bubble, and he exits a bit faster than most people did. And he started his company, second company, Moula, which really focuses on giving small loans to SMEs and small businesses. And he has a very interesting story as well. The company grew exponentially, and today the numbers are staggering. So I'm going to stop talking, and I'm going to invite them both on stage. So please help me welcome them, and let's have this chat about fintech, please. Thank you very much, guys. I think you gotta, sorry, we gotta do the logistics first.
It's on.
Right. Well, thank you for joining us. I did a really poor job for introduction. So, Aris, first with yourself, can you tell us a little bit about Moula?
Yeah, a little bit about Moula. So, I guess we're part of this wave of disruptive lending, for want of a better word. Our focus is very much small business lending, and even more specifically, for the benefit of Charlotte as well, small business lending in an unsecured context. We do an unsecured lend based on data that we obtain through an entirely online process whereby we do all the necessary compliance / identity verification checks by hitting various databases in real time, hit the sort of relevant data source. For us, being a strategic partner of Xero, the cloud-based accounting software, I've got to plug those guys. So we hit Xero, for example, or we hit a bank account. We underwrite off the back of that information and, in effect, provide real-time approvals, intraday funding for small businesses that are looking for growth capital, working capital, effectively a segment of the market that traditional banks in this country have left to wither and waste away for perhaps the last 30 years.
Right. And Charlotte, what about Timelio?
So Timelio is a peer-to-peer platform for invoice finance, so a bit more of a niche than Moula. So we're effectively matching high net worth individuals on one side, investors, directly with, again, businesses, typically small and medium-sized businesses for working capital funding. Now, what we're doing is effectively bringing two new business models. So that's the technology-enabled funding. So that enables us to take on a new risk assessment model. And secondly, we're a marketplace, so we can effectively have a new distribution and assess risk in a different way.
Right. Very interesting. I mean, both of you have talked about data and how crucial it is and how fundamental it is to your business models. How do you use basically data, and how is that integrated in your business? Is that the factor that makes you different from the traditional financial industry?
I think it's availability of data as opposed to and access to data as opposed to the data. Like, we're still doing a traditional underwrite that bankers and sort of credit officers have been doing for a while, but it's the ability to access, as I mentioned, the ability, the identification, verification in real time. It's the ability to obtain someone's P&L, cash flow, balance sheet in real time, run it through an algorithm as opposed to run it through a human being. That enables us to obviously facilitate a lend that is intraday as opposed to 20 days, which is your standard bank approval process, and typically longer. So it's that access that is the differentiator. Then there are elements, I guess, of our underwriting which enable us to be a little bit more, a little bit more peripheral insofar as how we approach a lend, i.e. looking at alternative sources of data, being a bit more lax insofar as the typical criteria that a bank might utilise, and all of those put together is ultimately what that's what's making this whole fintech movement different to traditional banking as we have known it previously.
We use data, but we use it a little bit differently because we're not underwriting the business for a loan. So ours, because it's an invoice finance transaction, we are giving our business the cash up front for their invoice, and so they're not waiting, say, 30, 60 days for their customer to pay. So they're effectively selling the right to receive payment for that receivable. So it's a sale of an asset. So we do look at it differently, and it is there is some security that we take over that asset, that receivable. And I mean, the data that we would look at would be, again, integrating with accounting systems, looking at their financial position, but also it's a lot based on who their customer is. So they can kind of leverage off their large corporate customers and their credit rating. So we can make decisions, again, same day. If they're to go to a traditional finance provider for invoice finance, it'd be a minimum of 8 weeks, if not longer. So.
Right, right. Now, we're here on the topic of fintech, right? And it's the kind of word that is being thrown around quite often these days. What does it mean? What is fintech, right? How would you define fintech?
It's a very good question, and I actually think it's there isn't really a right or wrong answer. And you know, Aris and I have both been involved in the establishment of the Fintech Association, and I think this is a really critical point of what is it? How do you define it? In my opinion, I would say it's an organisation that is using technology to disrupt the way financial services systems and products are currently being done, and effectively, ultimately being innovative and giving your customer a better experience. So, you know, how broadly do you define fintech? I think you've got to focus on what ultimately are you providing to your customer, and are you doing it differently?
Aris, what do you think?
I think that was pretty good, actually, that definition over there.
Detail that, right? Fair enough, right. Now, you know, fintech is relatively a new term that we're seeing here in Australia. It might not be the case in other places. You've personally been based in London and Hong Kong before. Charlotte, yourself, you've been based in London. In the US, it's a terminology that's been around for maybe half a decade or so. So where do you see Australia when we're talking about fintech? Where do you see Australia? And I understand there's some big players like Tyro, so on and so forth in the market over here. But in general, when you compare it to some of the other more mature markets out there, where do you see Australia and fintech?
Yeah, it's a good point. I mean, when we started Moula over 3 years ago now. So when we set upon this course and we started talking to partners and investors about what we were doing, the term didn't exist. So we didn't rock up to an investor presentation and say, yeah, we're a bunch of fintech guys, because no one used the term. And then literally in the last 12 months, it just it went through the roof. If you read the AFR or you read the Age business section or all the media, like that was effectively one of the most pervasive terms in the AFR, I would say, last year, just the rise of fintech to the point where it made the New Year's Eve edition. It was like it was amazing seeing that change in the usage of the term. So I think in the space of 12 months, we've effectively, and it always happens in Australia, we sort of take a little while to cotton on, but when we cotton on, it happens exponentially. So in the space of that 12 months, we've probably got to a very similar level that other parts of the world have gotten to over the course of 5 years. What we haven't seen, which we've obviously seen, particularly in the US, is some of those fintech entrants go public, become mainstream, like we have with the Ondex, at least in my space, and similar businesses like that in the US, the Squares, for example. We haven't seen that, and that's just because guys like us haven't been around long enough to even justify a listing, and the sort of the public dollars that you would expect there. So I think the perception's increased, but in terms of the public awareness, and that obviously then brings the public dollars, we've still got a bit of a path to.
Right. So you feel a lot of, maybe not resistance, but that lack of awareness when you approach your customers. They say it's a business that lends me money in 24 hours and there doesn't have an office that I can go to. Is that a little bit hard for people to digest, or your customers? Do you face that? Anything in those lines?
To some extent, yes. You wouldn't use the word fintech to your customers. They wouldn't know that. So fintech is a word that might be used a bit in specialist media and journalists that are familiar with it, but it's not a word in the general population. I mean, I've been in a meeting, I think, probably with an investor fairly recently where you say fintech and they go, huh? and so it's getting there, but the other thing is, it is an education process, because even the media and journalists, when they write about fintech, there's still an education process, I think, here in Australia, then getting up to speed as to actually what it is and what it means. And as you touched on before, if you compare to the UK, the terminology was, 5 or more years ago, alternative finance, not fintech. So, and they're trying to move away from that, because it's like, oh, we don't want to be alternative, we actually want to be more mainstream, and they are more mainstream over there. So, and that gets shortened to alt-fi, which is pretty popular over there, and they want to move more to fintech. So it's kind of evolved. I think in Australia we missed the whole alt-fi, and we just came in at fintech and getting there.
Right, interesting. Now, you said that you were talking to investors, and you said when you said in fintech, the guy just went, what are you talking about? Did you just say, come on, give me 5 million? I don't know if that works, but what do you see when I know you guys been involved with Liberty, and when it comes to investment in fintech, right? That's something that you definitely see rising globally. How is that in Australia? Are you seeing attention from local investors, or are you seeing attention more from international entities like Liberty coming in and looking at the fintech entities inside Australia? Maybe Aris, you want to go first?
Since we did the deal with the cap raise with Liberty, so that was April last year. So it's pushing a year, but not quite. We've definitely seen an increased interest both domestically and offshore in terms of investment appetite for fintech. No question about it. In terms of the concentration of interest from domestic versus the US, safe to say, I get a lot more calls from US institutions, but more by virtue of the fact that there's more of them. I think there's still only a very selective group of venture capitalists and private investors in Australia for us to go and engage. So, definitely a lot of interest offshore, but it's safe to say for those who have a focus domestically, they're getting to a point where financial services, fintech, call it what you will, is part of their portfolio. So, investors will want to have, part of that allocation devoted to someone who's working on disrupting the banks.
Right. Charlotte, what about your experience? What do you think about investment in fintech?
Yeah, I mean, we've had a mix of interests from outside Australia, within Australia. We've really, our capital raise experience was, maybe a little bit unique, but we had quite a lot of interest, and we were in quite a lucky position to think about who do we want as investors, and we've got a mix of sort of really high net worth individuals and people who can help our business. And in fact, there is money in Australia if that's what you want to seek out. And interestingly, we get a lot of overseas interest for investors on our platform, so not equity investors. And their experience overseas is if they're trying to get on peer-to-peer platforms over there, unless you get in the early stages, you miss out. They're closed off to a lot of investors. So they're really keen to get in here at an early stage, and work with us as we're growing out our operations to try and secure some, investment into the invoices.
Right, I see. Now, I know there's going to be a lot of questions about fintech. So before opening the floor to questions, I have one last question about, there are possibly a lot of people over here that who are interested in exploring the fintech scene and really knowing a little bit more, starting a company. If you were going to give advice to somebody who's looking into entering fintech in Australia, what would be the advice that you would give, starting with yourself, Charlotte?
I think I would think it's quite important to have some financial services experience. What we've done is, Andrew and I, we've both had careers in finance, and we've been able to bring in their technology capability. But I think you really need that understanding and depth of experience. And obviously regulation in the space is a big one. We were, our sector is one that is probably less regulated than some of the others in terms of what we do with sales of invoices. But I think that's a careful one to think about. How regulated is the space you're getting into, and what's your experience?
Regulation is a big factor when we're talking about financials.
Oh, yeah, with some of the other fintech companies, it sure is, not so much for us.
Aris, how's regulation at your end?
What advice would I give someone? Just rip the Band-Aid off, get involved. It's easy to say because I think everything Charlotte said makes perfect sense as well. But yeah, it's one of those things where there is regulation. There is definitely legal ramifications for not taking someone's money the correct way or for not lending money to the right person. Yeah, effectively you go to jail. So relatively important legal ramifications. So you need to address all that. But
you go risk it for the biscuit, right?
Yeah. Risk it for the biscuit. I like that. But I think when we started Moula, it was very much us coming from a financial services background, and that's critical. And to Charlotte's point, totally agree. But I wasn't. I didn't have a career in small business lending. I had a career in sort of fixed income, sort of credit markets. So I understood credit. I knew how to underwrite risk, whether it be small or big business. Insofar as the niche aspects of lending to small business, insofar as addressing the relevant channels, insofar as the technology, that was just like run head first into it and just hope for the best. And I guess, it's not to say don't address all the really important elements of regulation, because I've seen it already with a lot of people who go down the fintech path and forget that they need a custodian license, or they need to set themselves up as a deposit-taking institution. Really basic stuff that if you're in banking, you kind of go, yeah, it makes sense, but for a young kid has no idea, it's a tough one. But you only learn from your mistakes, so just kind of get in there, and it's like any space, right? Just give it a crack and fail fast and move on.
Get your hands dirty, right? Okay. Well, I wanna open up the floor for questions. So are there questions in the crowd? We've got one right there.
Hi, this is for both of you. Let's say if there were an investor wanting to put 10 million bucks into your company on very favorable terms, but their stipulation was that you had to invest all of that money in product development, what would your initial reaction be? Like, what would you invest in?
That's a great question, by the way. So you had to take that entire 10 mil and just focus exclusive of marketing, exclusive of the sort of other day-to-day activity. You know what? I'd actually, obviously, a lot of the challenge we face is awareness, and that's marketing spend. So I definitely have a desire to use money for marketing money, but the reason I like that question is our platform in itself will start to self-market when people realize how good the customer experience is. They'll come onto the platform and they will appreciate that they got funded intraday. It was a function of stepping through 5 screens, and that product experience was so good relative to anything else that they would experience at a major bank, that effectively, as I said, it becomes self-marketing. So if I had that 10 mil, we would have the most efficient experience. We would have the most efficient sort of data capability insofar as being able to underwrite and utilize that to make more informed decisions than we do today, because we've got money, but it takes time to spend it. So I'd embrace that. I think that would make the product experience the driving factor for creating awareness.
All right, Charlotte, is there Anything you
Yeah, I
want
mean, I think I could put $10 million to work. I'd focus on trying to source the best developers I could find for a start, because I think that is a challenge for us in Australia, is finding the really good talent in the dev side with the experience. So I'd find the best developers I could find around the world, get an awesome team, and invest in R&D as well, because there's a lot of new technologies emerging that can be used in the fintech space, and I can give you one example that might be blockchain. There's a lot of work that needs to be done in researching that, so yeah, that's where I'd put the money to work.
Right. Any more questions from the audience? Right. Yeah. And then the last one would be at the back.
Hello. Yeah, just a question. What's your goals for next year? So for your yearly goal.
Which one do you want to go?
It's an easy one for us, actually. I think, yeah, we spent the last year sort of, creating, the foundation, if you will. We had the year prior was creating the platform. Last year was creating the foundation and the distribution capability, if you will. This year for us is 100% about just growing that distribution and creating awareness. So like I mentioned, in other parts of the world, fintech's gone mainstream. I want this year for us to be the year we go mainstream.
Yeah, I think for us it's really about, last year it was for us as launching the business and getting our first customers and getting off the ground. And this year is about scaling that business. And whilst we've done $10 million in funding, it's a many $billion of funding and size of the invoice finance industry out there. So we'd be focusing on scale for us and looking at a few key sort of deals that we might be able to do in terms of opening up distribution channels for us.
Right. We got one question at the end. The gentleman over there. Yep. Be the last question.
I know talked a little bit about funding before, whether Australia or overseas. I'm just interested in terms of, I guess, the competitive advantage of fintech in Australia. Is it really being developed for the Australian market, or are you seeing anybody, take it to markets overseas, what they're developing?
Do you mean the Australian-based businesses?
Yeah, Australia-based businesses.
Yeah, at the moment, the Australian-based businesses are really quite, relatively focused on Australia. Yeah, I mean, a few of them might be looking over to the UK because it's, they've got a good setup there. It's a friendly environment, but there is an opportunity in Australia. It's, every country has the regulatory environment. So I think that will happen in terms of the expansion outside of Australia. But right now, for a lot of these businesses, in your first year or two of launching, you don't want to spread yourself too wide, too far.
I think it's also biased by the fact that, because we're both in the lending business, lending is probably about as regional as you can get insofar as how you perceive the world, if that makes sense. And just to give you an example, we built a platform for the Australian market. We went about not licensing some US platform to help us loan service, to help us underwrite, or help us through any path of that whole product cycle. We did that because, at least domestically from a lending perspective, and again, more relevant to me than, say, taking asset security over an invoice, domestically, we exist in an environment where there isn't comprehensive credit reporting. So if I took a US underwriting platform and I plugged it into Australia, it wouldn't work, because a US platform works in an environment where there is comprehensive credit reporting. You got bureau reports both at the personal level and at the business level that can feed into that underwriting engine to give you a decision. That's actually not the case in Australia. So in Australia, we're much more reliant on not so much the bureau data, but the real data, so the accounting data. So you kind of have to almost rejig your entire underwriting platform to be relevant to this domestic market. And what that kind of means for us as a business is we've got this really we've got this good baseline where we're actually not relying on the bureaus, we're relying on the business data. So yeah, we can take that global if we so choose to. But yeah, today it's a domestic business and it will remain a domestic business. And to my point about the bias, you know, if you're talking Bitcoin or you're talking blockchain, you've obviously got, that's not domestic. That's a global product. So for all those guys out there in that space, it's a very different market sizing.
Right. Well, thank you very much. That was really, really good, and I think it shed a lot of light on what we're talking about fintech, and especially with the introduction at the very beginning, with the guys talking about things to look forward in 2016. I really appreciate this for us to dig a little bit deeper into fintech. So please, can you join me in thanking the Aris and Charlotte? My next guest, Adam Schwab, the CEO and co-founder of Aussie Commerce. Now, Aussie Commerce has an extremely interesting story. Aussie Commerce started in 2010 and now has about 15 e-retailers under its umbrella. It's amazing what they've done. And from 2010, they've now become one of the, if not the biggest, one of the biggest e-commerce groups in Australia, which have global reach. They've hit $210 million this quarter, this financial year, 2015, which is a 50% increase from the year before, which is, again, it's mind-boggling, the growth that they're experiencing. And they have companies under their umbrella which they started initially with deal.com.au, and they started looking at other platforms that really complements the existing infrastructure that they had. So I'm not gonna go on any further, and I'll let you guys hear it from Adam himself. So please help me to welcome Adam to the stage. Adam. Thank you. Thanks. Thanks, please. Right. Thank you very much for joining us.
Thanks for having me.
Yeah, pleasure. Pleasure's all ours. So, Adam, the first thing that I want to talk about, first of all, can you give us an introduction about Aussie Commerce? I think you can tell I'm pretty lousy when it comes to giving introductions. So can you just give us a quick introduction?
I think you did a good job. Aussie Commerce is a diversified e-commerce retailer. So we've got 15 different websites across multiple different brands. But our major businesses are Luxury Escapes, which is a travel business. So we sell travel packages to places like Thailand, Bali, Queensland, Victoria, New South Wales, Europe, America. We've got a couple of really big product sites. One's called The Home, which is a homeware site, and Brands Exclusive, which is a fashion and homeware site. We've also got a site called The Active, which is a sportswear site. Then we've got local leisure sites called Living Social, Kudo, deals.com.au, UFA, to name a few, and a couple in New Zealand called Treat Me and Daily Do, which sell a mixture of things, but originally were local businesses based on the Groupon model, but have now expanded to diversify themselves to sell product and travel as well. So we cross-sell a lot of stuff across different sites. We've also got a couple of brands that are more media focused. I've got a business called Spreets, which we bought from Yahoo 7, which is effectively an affiliate business, and a business called Pinch Me, which we purchased last year, which is a sample business. So essentially a sample/market research business. So you may have in the past gotten free stuff outside a train station. So Pinch Me is like a digital version of that. So we'll give people free stuff, and we get data from them to give back to clients like Procter & Gamble, Nestle, big multinational businesses that want to know what people think. So you've got to have a great product first and foremost. If the product is great, like the person you were speaking about, then you've got to just make the right decisions and execute. And execution, there's no magic to execution. Execution is simply not delaying problems and getting stuff done. So rather than, and human beings have a tendency to try and are very good at ignoring bad stuff. So if the share market's crashing or your shares are doing badly, you won't look at them. If your property market's crashing, you won't look at it. If your team's losing, you won't watch the replay. People, And the same with business. If bad stuff may happen, we tend to think, oh, it won't happen, it'll get better.
It'll go away.
But I think what our approach has always been is prepare for the worst. And as Andy Grove, the founder of Intel, said, only the paranoid survive. So be paranoid, and execution is about being paranoid, and it is about seeing the problems that may occur and solving those problems before they occur.
Can you think of one or two examples of decisions, like big picture decisions that you've made where you've gone left and the other one's gone right and they've failed and you've succeeded?
Yeah, another good one. I think that the perfect answer to that is in our Groupon style business, deals.com and Kudo and Living Social and Uber. If you look at the first couple of years of that business, there was incredible growth and it got huge press, and for about a year it was the great new thing. And we were always, and there were a lot of businesses pumping a lot of money into this. So a lot of businesses had raised money. Most of them, or they were backed by big corporates. And we were seeing these guys spending huge amounts of money on marketing. So you see Living Social trams going past, and you see TV ads and all this stuff. And we, after about 6 to 9 months, we started realising the local business was probably not the best business at this stage of the cycle. It was going to be a great business in a few years' time when there was consolidation, and there has been. But there was 80 competitors at one stage. And all these guys were spending money and operating at losses, and we were profitable. We had a really nice travel business in that business, and a solid local business, and we were lean. So we were profitable. We saw all these other guys spending a fortune, and we knew we just had to wait it out, and we'd get our opportunity. It's a classic tortoise and hare. And we gradually, so the first thing we did was we merged with a business called UFA, which was a bit like us. They had raised money, but they were independently owned. So we brought our business together. It was a pure script deal, pure equity deal, and we had more scale. And we realised there's some real synergies in this business. You put them together. Instead of having 2 sales guys doing the same thing, we had 1. So there was lots of synergies there. And then we later bought Kudo from 9MSN, and they had a great database. So they'd run the business, had some really good people in that business, but it just wasn't a great fit for them. They were a media business, not a transaction services business. So we bought that business, and again, we put them on our platform, got some really good people as part of the acquisition, and doubled the size of the business again. So we went from 60 to 120 people, and then gradually brought it back, but doubled our database as well. Then we did it again with Brands Exclusive, and did it again with Living Social last year. So we've been able to, all these guys invested heavily, so we were able to pick up databases that people spent $20 or $30 million on for a couple $1 million. So because we were far more conservative and risk averse, we ended up being the biggest player or equal second biggest player in that market, because almost counterintuitively. So we went left, they went right, they went aggressively, we went conservatively, we ran the business for profit, they ran the business for growth. And I think you've certainly seen the last couple of months in the US, especially in here as well, the market's very much re-rating these money-losing businesses, and even not money-losing businesses are being re-rated. So the revenue businesses that ran themselves to try and sell for a revenue multiple, people are sort of finally realising that's not how you run a business. And we never ran the business. We ran the business as an old normal retailer, and we thought you got to sell things for more than you pay, and that's sort of how we ran the business. But there were a lot of people selling things for less than what they paid, and eventually it took a couple of years, and insanity lasts longer. The market can stay irrational longer than you stay solvent, is the old adage. And it's sort of the same thing. We fortunately stayed solvent long enough, but we were very different to every other business pretty much in the market, and as a result we're still standing, and 77 others aren't.
Well, Adam, thank you very much for tonight. It was really a pleasure for joining us, and we definitely look forward to maybe working with you further on with DS and other ventures. But please, can you help me thank Adam for joining us?